Dear viewers, welcome to this episode of Your Life, Your Money. A lot of investors have a doubt in the mind. What might happen in the general elections 2024? How will the elections results will impact the performance of the stock markets? They are a worried lot. Will markets correct? Will markets go through an upcycle? What might happen? In this episode, I am going to answer this question by deep diving into the data of last 25 years general elections in India, and that is going to give you a clearer direction about what you need to do. Should you postpone your investment decisions? How should you position yourself very well in case if the markets were to not give the results what you have expected? What might happen? All these questions will be answered in this video. Stay till the end of this video. It's a very interesting result, and it has a bearing on what might happen in the future. This is NRI Money Clinic for you, and I'm Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
To know what exactly happens during a general elections, what happens 6 months prior, how will the build up to an election happens, and what if the election results were to surprise the investor community, what consequences will follow, and what happens 6 months later to that. To know these things, I started researching around the data of last 25 years. I bumped into a very interesting piece of research done by Megatrends, and Megatrends is run by Mr. Atul Suri, one of the finest brains of India, one of the finest analytics. We remain in gratitude to you, Mr. Atul Suri and team, for this piece of data. We have collected it from the videos that you have produced on your channel. We remain in gratitude to you for this masterpiece. First, let us look into the 1999 elections. There were elections prior to that. We'll not take too much into it because it's a period of turmoil prior to that. We had Harshad Mehta scam in 92, Sensex started in 1979. There were a lot of issues in between. So let's look into the nearest 25 years data. 1999 is a period where people were tired of the previous coalition government, and the general elections gave Atal Bihari Vajpayee opportunity to form the government. We just dug into the data. Where was the markets 6 months before this general elections? Interesting perspectives here. 6 months prior to the elections, Sensex was at a figure of 4,042. On the date of the result, Sensex was at 4697. The first 6 months build up to the elections gave a return of 16% for those investors who invested 6 months prior. 6 months later, Sensex climbed to a level of 4,866. It gave a return of 3.60% post the election results. All in all, if you have started investing 6 months prior and waited for the 6 months post that election period, in total, you got a return of 20%. That's very attractive. 99 to 2004, Vajpayee government was very popular. It was an India Shining campaign, and everybody expected Vajpayee to be re-elected. Even the exit polls, the pre-poll surveys indicated that the Vajpayee government is going to come back to the power. But when the election results came in 2004 and the events which followed later on, because of maneuvering and because of these number games and the coalition, Sonia Gandhi's swift moves made sure that UPA 1 came into the power. Vajpayee lost the elections. When we dug into the performance of the Sensex during this UPA 1 2004 elections, 6 months prior to the election, 4,949 was the record the Sensex had. On the date of results, it was at 5,399. In the build-up, it gave you a result of 9.1%. But what happened after the election result is completely heartbroken. The markets went through a downward spiral. For 2 days, there was a downward circuit. Market collapsed by 25% because the election results gave a surprise. Vajpayee was expected to win, but he lost. As a result, from the build-up of 5399, markets went down by 25%. But what happened after that? In the next 6 months, interestingly, markets bounced back to 5964. If I do not calculate the downward circuits the market hit, even from the date of results prior to the election announcement, from 5399, market moved to 5964 6 months later, further giving a 10.4% return to the investors. Again, if I take the first 6 months before the elections and to the next 6 months post the election, the markets in total gave you a return of 20%. There is a lot of story to tell in between. The markets went down, but markets bounced back. All in all, for those investors who invested 6 months before the election, in 1 year, they made 20%. UPA 1 was a very popular government. Then came the election 2009, where it is a time for UPA 2 to win and continue. The elections gave a results for continuation of UPA government. What happened around this time? 6 months prior, the Sensex was at 9,385. On the date of result, market was at 12,173. That means in the 6 months of build-up, market gave a return of 29.7%. 6 months later, markets climbed up to a level of 17,032. Again, it built up from there another 39% after the election. All in all, 6 months prior to the election and 6 months post the election, market gave a stellar return of 81.5%. But we don't need to see this result with the gains you have got because of the elections. Because there was a very eventful thing that was happening around this particular place. There was a global turmoil and there was a Lehman crisis. That is the reason markets had corrected from 21,000 on the top to 8,000 and the markets were recovering. So these two incidences were happening together, because of which the election results also got magnified. 6 months prior to the election, 2008 December or so, markets have bottomed out and markets were also recovering from that bottom point. So the two events converged here, and that's why it is showing a result of 81.5%, and it has nothing to do with the election result of that particular year. Then came the 2014 elections. UPA 2 was a disaster. The country went through a policy paralysis. There were lots of scams. People were looking for new faces and a new government to be formed. That's where came Narendra Modi. And he came with a majority in the year 2014. What's the story this time? 6 months prior to the 2014 general election, Sensex was at 20,399. On the date of the result, it was at 24,121, which means in the 6 months, market built up a return of 18.2%. Post the elections, in the next 6 months, markets jumped to 28,046. Again, a further rise of 16.27% post the elections. All in all, in 1 year, 6 months prior to the elections to 6 months post the election, market in total gave a return of 37.5%. That's really impressive. Now let's look at 2019. The 2014 Narendra Modi government has been quite popular. Reforms were happening in place. Opposition was nowhere in picture. It was in complete disarray. Nobody expected opposition to win the election. Everybody expected Modi to continue, and the results came as expected. What happened this time around? 6 months prior to the elections, Sensex was at 34,081. On the date of result, Sensex was at 38,811. Which means the build up to the elections in the 6 months gave the investors 10.9% return. What happened 6 months later? Sensex climbed to a level of 40,359. Again, adding another 3.9% post the election. All in all, 1 year, 6 months prior to the election to 6 months after the election, the markets gave a return of 15.4%. Again, a very impressive return for any investor. So the message is very, very clear. You dig into any elections. If you invest prior to the elections and you withstand the volatility that comes along with the election results and stay put, there is nothing to be worried about. See, the election results as such do not impact the stock markets in the long run. The governments of the day will only work as either a headwind or a tailwind. No government, whether it's a BJP government or a UPA government or government of the day, wants economic activity, want industrialists to put factories, kick up the economic activity in a country. They will try their best kickstart that. Forget about the political sloganeering. See, we hear about a lot about the Adani, Ambani and all these names, but at the ground level, the politicians, everybody wants industrialists to come and invest in their states. We hear a lot about these Adani issues. Adani is building the biggest transshipment port in Kerala, and that's not run by a BJP government. So it goes to say, whatever could be the narrative which is being built, but on the ground, the Sensex and the GDP growth happens because of this economic activity. Any government which comes into the power will work towards the betterment of the society, will work towards building the economy. And India has seen so many governments, the Congress government, the BJP government, the coalition government of different colors, but every government during their tenure have done one or the other things for the betterment of the country. So elections in the long run is a non-event for a long-term investor. So why I'm doing this survey right now? It's because we are just 6 months to the elections now. If you take wise decisions today and if you are guided by the data that I have provided to you, it tells you only one thing. Do not get worried about the elections. It's probably the best time for you to invest right now into the market. Let anything happen. If Modi were to lose elections tomorrow, yes, markets may hit a downward circuit, but ask yourself a simple question. Because if Modi loses elections, will the factories be shut? Will the banks be closed? Will the life come to a standstill? It will not happen. The next government, whichever which gets elected, will get on to its business, and it is going to be a new life, and economic activity will continue. Overreactions will happen because markets expect something. If it doesn't happen, obviously there will be short sellers, there will be panic, and because of which the markets will go down. How do you have to react for that? The simple way to react to that is, if markets deeply correct post that elections, all that you have to do is press the accelerator and buy in large numbers. That's exactly what you need to do. All the work which is done in last 10 years is giving results. The highways, the infrastructure, the airports, the factories, Make in India, Atmanirbhar Bharat, defense replacement, defense exports. These are all long-term in nature. It will not change because if Modi loses election, nothing of this will change. And so many people employed because of this, and these will all have long-term consequences. So if Modi gets re-elected, it's a different scenario. If Modi were to lose elections, it might give a downward circuit, but that's a buying opportunity. What if Modi wins the election? In that case, the possibility is that the markets will go through an upward movement, sharp upward movements may see, and markets get a cue that it is going to be a stable government and it expects the same performance of the last 10 years to continue for next 5 years. So the markets will get re-rated, and probably markets will discount what will happen in the next 5 years, 2024 to 2029. That's exactly what happened in the year 2014. Markets moved all the way from 18,000 to a level of 24,000 even before the elections, and post elections that went closer to 30,000. That's called a re-rating of the markets. Market run ahead of time because market get a cue that it is invariably going to happen. People go and put that money there. So irrespective of these results, all that I would suggest here at this point of time, if you are a long-term investor, you have nothing to worry about. If you are a regular investor, don't alter your investment pattern. If you are a person who is newly coming and want to test the waters, probably this is the best time for you to invest in the market than waiting for the elections to happen. The message is, absolutely clear. Now, why I'm asking you to invest now itself instead of waiting for the elections to come or decide at a future date? The reason is something more interesting. What happens in between the elections? That also has an interesting story to tell. Again, we dug into the history of last 25 years, what happened between these elections, and that threw up an interesting perspective. Now, here I am considering the performance of the Sensex between two data points. The two data points are 6 months after the election of 1 year and 6 months prior to the next general elections. Now, in case of 1999 Vajpayee elections, 6 months after the election, the Sensex was at 4,866. 6 months prior to his next general election, Sensex was at 4,949. That means the 4 years in between just did not give any results at all. There was no gains for the investors. Literally 4 years were washed out. But in between there was an event. The event was the dot-com bust. Markets moved up because of this dot-com bubble, and they crashed and came down. In the 4 years period, investors made no money. 2004 is UPA 1, Manmohan Singh government. 6 months after the elections, the Sensex was at 5964, and 6 months prior to his next election, it was at 9385. So this 4 years period, all in all, gave total of 57.3%. Divide it over 4 years, it gives a figure of 14.34%. That's interesting. Again, this 5 years period from 2004 to 2009 has been very, very eventful. The world went through a massive bull run across the globe, which resulted further into the crash subsequently. Even though the results 6 months prior to the next general election of 2009, Sensex was at 9385. It hides a lot of information. In between, the Sensex has climbed to 21,000 because of the bubble which formed in the market, and it came crashing down to a level of 8,000, coinciding with the dates what we are considering it here. Even then, the returns the investors got is very, very attractive. What happened during UPA 2, 2009? Manmohan Singh was the Prime Minister. 6 months after the election, Sensex was at 17,000, and 6 months prior to the next general election in 2014, Sensex was at 20,398. The 4 years in between just gave, all in all, 20% return. Divided over 4 years, it gave a result of approximately 4.98% lackluster. During this particular period, the bank FD rates were in the region of 9.5%. The inflation in India was ranging between 10 to 14%. Sensex, even though moved up, but it was a lackluster returns during this particular phase. What happened during 2014 election? It is first term of Narendra Modi government. 6 months after his election result, Sensex was locked at 28,399, which means markets have built up a lot of expectation, and from the time 6 months prior to this particular period, it has given a lot of return. But 4 years later, Sensex was still stuck at 34,000. The 4 years between the 6 months period of post-election to 6 months prior period of the next election, Sensex just gave 22.85%. Divide it over 4 years, it gave a return of 5.71%, lackluster. Why did it happen? Simple answer. Markets have climbed up in anticipation immediately after the election. Markets were waiting the results to show up in the corporate performance, and that takes time. That's why next 4 years markets did not yield any great amount of return to the investors. Next, look at the second term of Narendra Modi government, 2019 to the present term of 2023. 6 months after the elections in 2019, Sensex was at 40,000, and today we are somewhere around 65 to 67,000 range. So the next 4 years here gave a return of 62.5%. Divide it over 4 years, it gave a return of 15.6%. 62%. 2019 to 2023 is again a very eventful period. There are two major things which can be observed here. One, we passed through a pandemic which resulted in a flash crash in the market. Sensex dropped from 40,000 to a level of 27,000, then made all the way up to 68,000. There was a lot of gush of liquidity infused by different governments across globe to come out of the effects of the pandemic. Also, the works which were done during the Narendra Modi between 2014 to 2019 started giving results, and the economic results were visible during this particular phase. So all in all, due to this, the last 5 years the Sensex gave very attractive returns. So the message here is very clear. It makes absolute sense for you to invest 6 months to 8 months prior to the elections. 8 months is not possible. Now we are 6 months into the election. If you have an intention to invest in the market, the best time is now. If you want the professional assistant to invest your monies into India, you can make best use of services provided by NRI Money Clinic. We have team of experts to help you invest your monies into PMS, mutual fund, or different other possibilities of investing in India. And you can reach to us through a WhatsApp message. Our numbers are shown in the description box below. We have also provided a link over there, and send us a message, and our team of experts are ever ready to help you on that. And before I conclude, I would also like to tell you what might happen in my personal opinion in case if Modi wins or in case if Modi loses. If Modi were to lose, at this point of time, there are no indication to suggest that. Obviously, markets may go through a downward cycle or lower circuits. But this can become a buying opportunity for you. Markets can overreact. As rational investors, you should not get moved because of this exaggerated movements. Rather, see it as an opportunity to buy into it. Obviously, 6 months to 1 year later, you will be sitting on hefty profits by this correct decision you take. What if Modi were to win the election? Obviously, as I said, once there is a stable government, market is likely to discount this factor and know that the same reforms will continue. There will be a stable government. How this government is going to perform is well known in the last 10 years. And markets may go through a quick re-rating, meaning market may move swift up moves and go and stay there, but may not move in the next 4 years. So if you wait for that day to come, what will happen is you will invest later on and you will spend those years because markets have already gone through a re-rating process. All in all, the best time to invest is now. If you are doubtful, do a regular investment. If markets were to correct post the election, press the accelerator and commit more money. That's where your interest lies. Dear viewers, I would like to hear from you as well. What do you feel? Which government is going to come? What might happen to this government? How will the markets react? What is the opinion you have? Your opinion is very important to us. Leave those opinions in the comment section below. Hope this research piece that we have brought for you helped you to understand the effect of elections on the stock market gains. 25 years data is a big amount of data. If it did help you to understand the finer points of behavior of the market, please do give me a thumbs up. If you are a person who is watching this channel for the first time, or you are yet to subscribe for the channel, do not forget to hit that subscribe button and press the bell icon. Do not forget to share this video with your near and dear ones, friends and relatives, and on all the WhatsApp groups on which you are connected with. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Friday with yet another topic on your life, your money. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.